How you guys doing? This is Martin Mesa with Rate 1 Financial. It's been a few weeks, but I'm glad to be back. Today I'm going to talk about whether or not it's possible to buy a house with no money down. Back in the day, about 10 years ago, before the credit crunch, it was quite possible, but now people are wondering if it's even possible right now. And the answer to that question is yes, it is possible. So I'm going to tell you a little bit about that program. This is only for the state of California because I only do business in the state of California, but I'm sure other states have similar programs. The program I'm going to talk about today is called the My Home Assistance Program, and it is a program offered by the California Housing Finance Agency, Cal HFA, up in Sacramento. And what it is you can use that program in conjunction with like an FHA mortgage or conventional mortgage actually, which typically requires minimum down payment of 3.5%. But with the My Home Assistance Program, it actually gives you a silent second mortgage to cover the down payment of 3.5%. So it's basically a loan for you to cover your normal 3.5% down payment that you'd have to otherwise pay out of pocket. It's a silent second, meaning there's no monthly payment to be made for that second. And you can even do it in conjunction with what Cal HFA calls a ZIP program, short for zero interest program, which is a third lien actually that covers your closing costs. So if you can't get your closing costs paid for by either your own funds or a seller credit or a realtor credit, you can take advantage of the ZIP program, and that'll even cover your costs. And lastly, you can also combine it with what's called the MCC program, which is short for Mortgage Credit Certificate Program. And what that does is it allows you to get a dollar-for-dollar tax credit for a portion of the mortgage interest you pay every year as a homeowner with a mortgage. And what it equates to on average is you wind up saving about double in taxes paid at the end of the year versus what you would normally save under the regular mortgage interest tax deduction. So that's called the Mortgage Credit Certificate. So between the My Home Assistance and the ZIP and the Mortgage Credit Certificate, I mean, you could buy a house with literally no money out of pocket and double your tax savings that you would normally otherwise realize as a homeowner. So in Los Angeles County, and it goes, there are income limits and sales price limits to be eligible for this program. You do have to be a first-time home buyer, but their definition of that is someone that has not owned the property that you've been living in for the past 3 years. So you can actually own property as long as it hasn't been your primary residence for the last three years and still be eligible for this program. But generally it's for first-time home buyers, and the income and sales price limits vary from county to county, but I'm in Los Angeles County, and here in our county you can buy a house up to $600,000 sales price and use this program. And the income limit, it varies again by county and by household size, but in Los Angeles County, for the average family size of 4, the income limit for the household is $87,000 and change. So as long as you're not over that, you can be eligible for this program and buy a house under $600,000 and take advantage of this. The cool thing about this program that I like, besides everything I've mentioned, is that it allows for non-occupying co-borrowers or co-signers. So in other words, if your family makes $85,000, which you're under the limit, you want to buy something for $500 or $600. Let's say that income alone is not enough to qualify for the loan, but let's say your parents are willing to co-sign for you and they don't live in the house or not going to live in the house. You can add their income to your income to help you qualify for the loan you want. And the good thing about it is their income doesn't go towards the income limit. So you can use their income to help you qualify for a larger loan, but their income doesn't go towards the income limit calculation. So only the household income goes towards that calculation. So there's a number of benefits to use that program. Those are the main ones I've mentioned. So that is the Cal HFA My Home Assistance Program. Hope you enjoyed that, and if you have any questions about that program, feel free to reach out to me anytime or to your lender. Most lenders should be able to offer this program. So have a great day, and we'll see you next week.